Assalamu alaikum, everyone. Today is January 9th, 2022. Welcome to Wall Street to Bay Street Sunday Chai with Sherry Portfolio Canada. My name is Nadeem.
My name is Shamil. Get your chai ready and let's talk about the markets. So Nadeem, Happy New Year. Pretty big week in the market to start. We saw there was a lot of, the market was down quite a bit over the first week of the year. Can you maybe talk about some of the weaknesses in the market early on?
Yeah, sure. I mean, we had a rough start to the year. Overall, if you take a look, the Nasdaq was down about 4.5% for the week. S&P was off by 1.8. The Dow only lost about 0.3%. So, but overall, it was definitely a rough week when you're looking at the large caps and what. Now, most of the blame is kind of going on what's happening in the U.S. with the U.S. Federal Reserve. Some comments kind of came out from their meeting that the market is perceiving the comments to be a little bit more hawkish than what they previously thought. So, this is kind of leading to the fact that they're thinking that tapering could be, faster than expected. Rate hikes could be more than expected. So in general, that's kind of what really grabbed the headlines this weekend and spooked the markets.
One question I have for you is, we hear a lot about bond rates. So what does something like a 10-year bond rate have to do with stock prices?
Yeah. So, a lot of the Fed's comments were actually reflected in the bond market. And what I mean by that is when the Federal Reserve is actually tightening, it causes people to, I guess you could say in some cases, dump bonds. And so rates do rise. So you'll hear a lot that the 10-year rate is rising. And ultimately, I mean, this is not only can kind of be a proxy to the cost of borrowing, but it also is a discount rate to value stocks, basically. And what that basically means is, and tech stocks, for example, got hit the hardest. Now, most tech stocks, their valuations are based on future earnings, future cash flow. And when rates go higher, what that does is it does give a hit to their value, because it does make future cash flow, I guess you could say the dollar in future is going to be worth a little bit less today. So, companies that typically have that are trading at premium valuations tend to get hit the hardest. And that's why we saw weakness in tech stocks, specifically, as you see, the Nasdaq, which is a tech-laden index, was down 4.5% versus the S&P, which was still down about 1.8%.
Another thing that we've noticed this first week is that Bitcoin, everyone's favorite topic, has been doing pretty poorly the first little bit of the year. Can you maybe elaborate a little more on that?
Yeah, I mean, Bitcoin is obviously a very complicated asset class. I mean, it's still in its infancy, relatively speaking. I guess you could say, I believe it closed around 42,000 or something like that US. And it took a hit also this week. First of all, it is still a risk-on asset. So in other words, if the market is in an appetite for risk, Bitcoin typically will do well. If the market is kind of getting off of risk, you do find crypto, tends to sell off during that time. Now, the other thing is that because the Fed is being hawkish, the market can view this as the central banks are actually, getting a control on inflation. And getting a control on inflation is an investment thesis for crypto, in the sense that, a lot of crypto believers, investors out there believe that, inflation is getting out of control, and crypto is a way to hedge it. So if you have, things like central banks tightening up on inflation, I guess the reason to be in crypto all of a sudden kind of comes down a little bit. And now we've seen that reflected in, the drop in crypto prices, at least for the short term.
Perfect. See, now that we've talked about all the bad stuff, let's transition to the good stuff. Let's talk about what areas of the market have done really well this first week.
Yeah, so like I mentioned, the Dow was up, it was down only 0.3%. So obviously there must have been some stocks in there that were positive for the week. And so as far as specific sectors, we saw strength in energy. So a lot of energy stocks acted well. The XLE, which is an ETF that has a pool of some of the largest North American U.S. energy stocks, actually reached a high. You had energy that did well. Some of the mining stocks started to catch a bit, and some of those mining stocks did well. Both of these sectors you can say are in a way, some way of a hedge on inflation. And the other sector that did well was, just forgot that off the top of my head. Sorry, financials. Yeah, so financials also had a pretty decent week, and a lot of that has to do with rates rising in a rising rate environment. A lot of banks and insurance companies, can at least have their margins increase. So those were the three bright areas of the market as far as this week goes.
Perfect. Thank you for your insight as always, Nadeem. And once again, thank you so much for joining us. And if you do have any questions, feel free to, put them in the comment section below. For myself and Nadeem, thank you for joining us.
Thank you. Assalamu alaikum.
Nadeem Mian, Portfolio Manager, registered as an advising representative, and Shamil Devji, Financial Advisor, registered as a dealing representative with Sharia Portfolio Canada Inc., a portfolio manager registered in the provinces of Ontario, British Columbia, and Alberta. Their opinions and statements expressed in this show are their personal opinions and do not necessarily reflect those of Sharia Portfolio. They are effective as of the date of this broadcast only and are subject to change. This discussion is for general information purposes only and is not investment advice.